What's up? How's it going? Welcome to this week's pre-week analysis for the week of June the 2nd to June the 6th. So let's dive straight into this video and let's do some live pre-week analysis here for you guys. So let's dive straight into this. So first step, like always, is to review the news for the week to know if there's anything that we need to be carefully looking out for. Like I like to say, you need to mix your technicals with fundamentals to a certain extent to actually succeed within the market, because you need to have some sort of edge, whether that be with a news release or whether that be simply looking at volume and real-time transactions and order flow. And we can truly combine that as well. So let's take a look at what happens tomorrow on Monday. On Forex Factory, we do have ISM Manufacturing PMI 9, and at 8:45 we have Final Manufacturing PMI. So we likely can't trade until after 9:05 because that's a 5-minute interval rule. You can't trade after 9. You can't trade before 9:05, and you can't trade after 8:55. So let's verify this by looking at financial juice, and it does look to line up really quick. What I also see is that Mr. Powell, the GOAT, is speaking at noon Central Time, so we typically won't trade there, but it's still good to know. Now on Tuesday, there is Jolt's job openings at 9 a.m. Definitely want to avoid that and have a 5-minute, maybe even 10-minute interval at that time. But on Forex Factory, that seems to be pretty much it. And looks to be the same on financial juice as well. So definitely avoid trading within a 5 to 10 minute interval of that 9 a.m. So no trading after 8:55 or even 8:50 a.m. and no trading before 9:05 a.m. or potentially even 9:10 a.m. You can trade after that, or you can trade before 8:50, 8:45-ish. Now, let's go to Wednesday. Wednesday, we have ISM Services PMI, which is the main thing, and we have BOC rate statements in Canadian, but we're focusing on the US. We do have ADP non-farm employment change. I do want to make sure this is not NFP, so I'm going to verify that. But you typically can check that here. And on here, yeah, it's not significant news. So really just a 5-minute interval at 9 a.m. would do so. And since this is stacked as well, would likely wait until placing a trade until after 9:05 a.m. with the 5-minute interval rule. Additionally, potentially even 5-minute interval rule at 9:30 at that day when we see crude oil inventories. But that's pretty much it for Wednesday. Thursday, we have unemployment claims, which is pretty high impact news. So we do want to be very careful on Thursday. As we have the jobless claims. So definitely I'm going to be monitoring that 7:30 time. If we make a really big move, I'll only take the best of best setups I see only if I see it, or else will likely stay passive. But this is like a medium tier of that high impact news, medium or low tier of that high impact news. So, but during the actual market session, I don't really see much we need to worry about. And on Friday, we have NFP. Friday, we can take the day off, lock in on something else, and review the day later on. And that's how I would structure it. We can keep this on the side, just watch price action to gain that extra screen time, but actively trading, I would not recommend on NFP. But that's basically the news recap, verified by both Financial Juice and Forex Factory. Now let's get into technical side and create our preferable outcomes or predictable outcomes for the week ahead and even tomorrow. So this can actually stand as a pre-week analysis and also a pre-day analysis video, but simply because we're reviewing the whole week, as long as setting ourselves up for tomorrow, we'll call it a pre-week analysis. So let's go straight ahead and start charting out. Now, realistically, you may not want to mark that, but it doesn't look bad to me to mark it as a supply zone here at the highs. So I will be marking that out. The highs of it will be main liquidity. We have, this is going to be a 4-hour zone. And then we have additional liquidity here. And that Friday action was actually really nice, played out with how we expected it to play out. But now we're back in this range, so it's gonna definitely be setting up in a weird position, as you'll see really soon. But we have main liquidity there. Potentially can mark that out as a 4-hour zone. So I'll mark it out unless we see a clear zone on potentially 3 or 2 hour. And liquidity there as well. I'm not gonna go too far out and move because in this week coming, I want to first analyze the upcoming week to see if we head up there or down till here. So I'll mark a bit lower just to be on the safe side of things, but then we're coming back into this gap fill relative levels, right? Which can get kind of confusing at times. Well, we have that. Now, that's pretty much gonna be it for what we're gonna chart, because honestly, when we're in when we're in the middle of the recent range, really, we typically will either head towards the top or head towards the bottom. And that will typically consist of the first few moments of the week. So if we can capture that, then we can reanalyze when we're doing our pre-day analysis. Right now, I'm focusing on what we can do to analyze what we think the week might start out with, or potentially even tomorrow result in. So we won't move this much typically because this was high impact news and the rebalance from that news. Now we're coming back down, but we will validate and create predictable outcomes using the volume profile. So quickly, let's mark out the range. And as you can see, volume is distributed throughout this entire range right here. Potentially not at that area, which means our range is a bit shorter, but consolidation could definitely happen as well, looking at what we're seeing recently. But let's go ahead and extend this over there. And same thing, our point of control is inside this range, but clearly you can see that there is a node here, so this liquidity could pose decent significance. And this entire area above, until potentially this area, is filled with volume at a decreasing rate. So that being said, we don't gain much from there other than this is potentially good liquidity to look at. But this is also good liquidity since you're seeing such high volume, and the most volume is traded inside of the range, which makes sense overall. Now let's continue to extend this even more. And same exact thing. Recently, no one has been within this range. But we do see the significance of this relative location, potentially even this relative location because it's a low volume node. But honestly, this area, this zone and this level might be broken through easily simply because it's in that low volume node. But let's continue to extend, and then we'll go into the 2-hour, 1-hour, and the shorter time frames as well, just to see if there's anything that we potentially may be missing out on. But taking a look at what we see here, now look at this. This area aligns straight with this zone, so this zone already has significance. Now we have a big volume node inside of the volume range that we have built. And this zone right here also has a lot of volume. So now it's structuring me in an even higher probability that this week we likely are going to head towards these highs or even towards these highs. We just have to see where price expands and where we show expansion at the start of the week. That's where my mind is going to right now. And since we're trading within this range, if we break out above this liquidity level and continue showing momentum towards the upside, easily we could head towards these highs. But if we get absorbed at this level, then we can head towards the lower level. And same exact thing applies if that situation happened in the inverse direction for these bottom liquidity levels. Now we do have liquidity there as well, but I would suggest that that is out of this week's movement. But anything could happen. Additionally, most of our volume has been traded here at these lows. It's not particularly leaning me towards one side or the other. What is leaning me more towards one side or the other is how we've been moving recently. And as you can see, we've been having particularly bullish movement and momentum within the market, even with a decent sized retracement, but we still are continuing that. So if we find rebalance at this area and break above without seeing major absorption, definitely can head up to this zone, which if we break, we could head up to these highs right here. But that's essentially what I'm noticing using the volume profile. As you can see, volume profile is a very, very, very great tool. It tells you a lot more about the characteristics of price than any of these technicals do. These technicals are just representations of these different candles and candle wicks. But going on to time frames, I'm just going to quickly check if there's anything that we potentially have missed out on, which I honestly don't think we have. Maybe a 1 hour zone there. But honestly, it looks like we caught it all. I'm going to leave this 4 hour zone wide for now. We can condense it later on, but since volume had a line so clearly, I'm not trying to condense it. But yeah, it honestly looks like what we've been seeing has been correct. This, I'm not going to mark that as a liquidity level because we don't have proper and built structure around it. Now, yeah, everything we marked on the 4 hour pretty much stands. Nothing particularly else that I'm noticing. Potentially, we could mark this low as standard liquidity and these lows as mid liquidity because that is there on the 4 hour. We just didn't mark it out. And this area as standard alongside this area as well, but that's just condensing more liquidity levels at these lows, in which we already know there's a large amount of volume that has been transacted at the area, which makes sense as well. Because since there's lots of levels compounded at the area, we know price really likes to tangle and weave around the area, generating lots of volume. So what I noticed and what are going to be my predictable outcomes just by looking at ES are going to be, so what I was saying was, well, I think my predictable outcomes are going to be simply looking at ES are going to be that from where we're sitting at right now, if we can break out towards the upside, we head until these highs at minimum. And that is if we see that this area does not get swept, because if it does get swept, I'm really expecting us to head down to this area. Now, same applies to if we go down lower. If you go down lower, then potentially we can head down to here if we break. But if we don't, I expect to see price come up. Now, this looks really confusing, so I am going to color code it just so it makes it simpler for the eyes. But if you've been listening to what I'm saying, you should understand the overall concept. But here is the overall predictable outcome, simply looking at the ES chart. Now, to validate or to invalidate this, let's go ahead and check on Q and see how what we mark does on there. So we have main liquidity there, main liquidity there, main liquidity there, and even there. We have main liquidity there, main liquidity there, and even main liquidity there. We could go down and mark this as well, just like we did, just to be on the safer side of things. Mark out all our gap fill levels, which on NQ we do have even more than we saw on ES. which is that's not the best thing to see, but doesn't really affect us much. So there's that, and then there's that lower liquidity. Now let's go down on time frame to see if there's anything that we missed out on. Marked out that, we marked out that. I'm gonna mark this again as a 4-hour zone because it will not hurt to do so. And let's keep going down time frames and see if you notice. So what I do notice is that there is a 3-hour zone here at the highs. So it's pretty similar to how ES is looking. The 2-hour, potentially that could be marked as a zone. Now this does give us additional information about the price action that we have seen, because price was unable to break above these highs. We just swept it and then now we made a move down. But easily that move up could have been a retracement that continues up. So not leaning towards one particular side at all for the time being. I will mark this as well as standard liquidity simply because that is something that I notice. And I'm not really seeing anything other than that. But yeah, those are going to be the main things regarding technical side that I do mark on NQ. Now let's get into the volume profiles. So starting out, let's start out with the recent range just like we did on ES. And now this is interesting because if you look at volume is distributed towards the upside. Now volume is all at these liquidity levels. And we have multiple liquidity levels up here. So it does seem that price wants to head and take out these levels before we see further action. But now let's extend it further. Yeah, all the volume is towards this upper side of the range. And if you keep extending it, let's see. What have I done? Just extend it, and what we see is that main volume is still there. We do have decent volume here at these liquidity levels, low volume node at these liquidity levels. It does make sense. This is quite an empty area. If you break through this level, we can likely head down to this area. So I'm going to be marking this as an imbalance below area. And then same thing that we saw in ES volume here at these lows. But now let's get and extend it up to these highs where things might become more interesting. And yeah, volume is up near this zone. Volume is still here. Volume is still there. So simply this zone, or same here, we have volume at that area as well, or this zone. But one thing is that we do have lots of volume here, so potentially price will want to head there first. So that is what I'm noticing on NQ. Now, regarding how that affects our preferable outcomes, well, let's go ahead and explain that. Because we're seeing much more extensive volume here towards the upside, I am favoring the idea that this is more of a retracement and we will head back up. But that doesn't mean that we will reverse at the area. Since it's a high volume area, that means that price really has to fight there. Buyers and sellers fight there to find out if we are going to head up or if we are going to break out towards the downside. So doesn't really affect our predictable outcomes that much, but I am favoring this move towards the upside at least till this area a little bit more. So I'm going to mark that purple, and we are going to continue with the green. So the purple outcome is what we expect to happen, but we can play with any of these outcomes. That is what we're noticing, and that is a result that we have gained from volume analysis of ES and now NQ as well. But now, to take things a step further, let's go ahead and check how the VIX may give us an edge. So, I mean, just taking a look at what we're seeing on the VIX, honestly, I'm not getting too much of an edge. But what I am seeing is it does look like we broke down towards the bottom side, which does push us in favor of continuation down on the VIX until at least to this area or potentially even this area, which is bullish in terms of ES and NQ. So since I believe this will continue either until here or till here, it works out perfectly with our preferable or preferred outcomes simply because we are preferring and expecting the initial upwards move to happen and take out this liquidity before we come down and take out this liquidity. But I mean, yeah, that's basically it. We took a look at the VIX, we took a look at ES, and we also took a look here at NQ in order to create multiple preferable and preferred outcomes with a particular bias at hand, which is that we think that we're gonna go up and sweep this liquidity or head towards that relative area before we come into this level or before we get to that level at all. And we did this through technical analysis, fundamental analysis of the news, just so that we're on how the market expands. Then we can go along with the preferred outcomes that we have here on the charts and have a structured set of mindset. We will have a structured mindset that will actually allow us to make more probable plays that work with how the market is moving. By using order flow as well, we can take advantage of a variety of different edges. So that's all. That's honestly all I got here for this pre-week analysis. If you have any questions, please go ahead and join the Discord server. The link is in the description down below. Everything is completely free, and you may gain a thing or two out of it. Additionally, I'll answer your questions if you comment it down in the comments down below. What am I saying? If you can comment below a question as well, I'll be sure to answer there. And additionally, if you want to take advantage of free order flow tools, I have left them down in the description down below as well. This includes Bookmap and footprint charts as well. You can't really find footprint charts that you can start practicing with for free right away, but with the help of Addis, you can now do this with a really easy setup process with only a 15-minute delay. So I highly recommend you guys to check it out. Both of those are in the link in the description down below. And that's all I have here for today. I'll see you guys tomorrow for first the market analysis and slash or the trade recap session, and also the pre-day analysis later that day after that as well. So I guess I'll see you guys then. Goodbye.